Hello everyone and welcome back to Southern Wealth. I hope you guys are doing very well. If you do enjoy the content, please consider dropping that like and subscribe. Greatly helps the channel, so thank you very much. Um, by the way, I've been trying to be very consistent with my streaming, so I've been trying to do it once every 2 days. Towards the end of October, towards end of October, middle of November, I'll be traveling. So keep that in mind. It's going to be a little bit tricky for me during certain periods, but I will try to come on as much as I can. But for the time being, at least once every 2 days. So today, bonds actually started rallying and they ended up dropping. Basically, the 10-year auction was apparently not very good. Once again, something that happens, it's now being used to feel why gold is going up. By the way, gold already went up before before the auction was bad. I say, oh yeah, it was in preparation. Yeah, but yesterday's 3-year auction was very, very good. So it's a bit, look, and the reason why I'm bringing this up is because my feed is getting filled with this. We have bond auctions regularly across many maturities. And from time to time, actually quite often, you have bad auctions. You have bad auctions in bad years, you have bad auctions in good years, you have bad auctions in more or less years. Just what happens. For one reason or another, it happens consistently. See, this part they don't tell you. They tell you something to scare you, but they don't tell you that this happens consistently. I think it was 2 or 3 months ago, a 20-year auction was really bad. And the world is still here. And if it's really needed, the Fed will step in and buy whatever is not bought, because they do understand that the bond market is the glue for all the financial system, and stocks, real estate, crypto, commodities, doesn't matter, don't work if the bond market doesn't work. So but bond market sometimes gets a bit shaky. Why? Because there's too much debt in the system. It's always the same story. There's no big conspiracy. There's not people underneath the mountain meeting in secret. It's just the dynamics. Governments keep on creating more and more debt, and they have to find buyers for that debt. The next wave of new buyers is going to be stablecoin issuers. Ta-da! We just found a bunch of new buyers of debt, so we can keep this going until AI and robots and productivity kicks us into a new gear of productivity, and then we don't have to issue that much debt. That's it. Think of it as a bridge. And the bridge sometimes has holes, and sometimes going to feel not very comfortable. And it's going to wear and tear your car. That's it. And, oh yeah, about gold 4,000. Because some people are saying, oh, gold is 4,000. You see, look, it's very simple. Gold is playing catch up to the other trades that already happened throughout the past 15 years. So stocks have been going up and up and up and up and up, whilst gold has been, and stocks even now, even the S&P now is above global M2 and inflation. So once again, let's step back, because this is very important. How much does money supply go up every year? Around 8%. Where does it go to? Risk assets. Okay, the cost of owning a house, the cost of owning shares, the cost of owning whatever. Okay, so that's 8%. What about the rest? Oh, around 3% is CPI typically. Okay, 11. Let's call it 4%, let's call it 12. 12. 8 plus 4, 12. Okay, that's the minimum. Your asset has to go up. Your investment, doesn't matter what investment it is, it's completely irrelevant. It needs to go up 12% per year for you to stay in the same place. And it needs to go above that for you to actually make money. Once again, if gold goes from 4,000, where it is today, to 2,000 to 6,500, it will simply break even versus 2011. That's it. No big conspiracy, no big anything, it's just what it is. You have to factor in the amount of money that is being created that finds its way into assets, the debasement of currency, the M2, plus the cost of living that is going higher every year as well. So whatever you're invested in needs to outperform that. The reason why gold bugs don't tell you about it is because then they have trouble selling their funds and their gold to you. That's it. So they want the same things that we in crypto want. We want people to buy and hold. That's it. We have an advantage, which is, in the case of Bitcoin, you have finite supply, and the new supply gets halved every 4 years. In the case of gold, basically, as the price goes up, the incentive to mine more and more and more gold is bigger, because the idea of the miners is to dump it into the market as soon as possible. That's it. So what you're seeing is basically, as liquidity keeps creeping in and is accelerating, and the business cycle is starting to finally show signs of going up, you have asset prices reacting to it. Furthermore, you have a magic or a massive change that everyone can feel is coming, which is AI, particularly when AI and robotics combine. Now, are there a lot of hype into AI? Yes. Is AI going to develop into a big bubble? Probably yes. Into a very big bubble? Most likely yes. Is it going to be all perfect, no issues, no challenges? It's just going to, the GDP is going to triple in 2 years and that's it, and we're all done? No. A lot of companies, and I do suspect we're going to have bear markets. We're going to have big corrections, we're going to have bear markets. Understand it. Nobody wants to hear about it because everyone is happy, because stocks are going higher, everything's going, I get it. But eventually going to have bear markets. But it's very clear to me that AI will be the future. Now, which company will survive? Who's going to be the winner? Are the winners the incumbents that are already there? The Nvidias, the Googles. I don't know. Nobody can tell right now. But one thing is for sure: AI is going to be more transformative than the cell phone, than the computer, than the internet combined, and that will lead into massive wealth creation. And that wealth creation and prosperity is starting to be priced in. And eventually it will be priced into perfection, which means anything wrong that happens will trigger a correction. And guess what? Corrections will be harsh and fast. Why? Because the currency is faker than it used to be. That's it. No selling courses to you, no selling masterminds, no, oh my God, I'm exposing. No. Just this is simply what's happening. This is why you go on Twitter and these people with 1 million followers keep on predicting the doom and the end of the world, and again, and this is going to crash because of that, and the other is going to go down 80%, and Harry Dent is back to a 90% decline prediction, and Peter Schiff talks about the next financial crisis on a yearly basis, because they want to feel smarter than anyone else. So they want to see connections where they aren't. They want to see, they want to be the ones to tell you, I told you so. This is why every time the stock market drops 3%, here comes Harry Dent saying that was the top, over and over and over again. It never changes. And this is how the dollar is always about to collapse imminently. Although the system is all designed for that not to happen, but sure, it's going to collapse tomorrow. The only problem with that situation is actually when you analyze the data, it doesn't pan out. Usually, like most of these theories, when you actually look at evidence, it doesn't really pan out. So, for example, the narrative now is this: foreign central banks are accumulating gold to get away from the dollar at a record pace. But then you look at how much gold those foreign central banks bought in 2022, 2023, 2024, and you compare with the first half of 2025, which is the only data we have, and guess what? It's actually a 20% decline versus 2022, 2023, 2024. So the amount of gold, the tons of gold, is actually dropping. So once again, this is my point. The narrative sounds very good. Foreign central banks, as governments want to get away from the dollar, are buying gold instead at a record pace because Trump is bad. This is the theory, the story. Reality, they're actually buying less gold now than they were with Biden. But that doesn't fit the narrative. So now we have to pretend that that doesn't exist, or not talk about it, or hope that the people listening don't actually look for it. That's the key. Now, when it comes to crypto, jumping to merrier things, this is actually even bad for my own expectations. So we hit a new all-time high. We sell off a little bit to basically 2 days ago pricing. We sold off from a price to 2 days ago pricing, and everybody was bearish again. And I'm like, oh my God. It's like, really? I mean, what if in 2 days we go to 130K and then guess what? We sell off to 126. Are you going to rip your head off again? I mean, yeah, look, as long as the mood is like this, I feel very calm, very, very smooth, very tranquil. There's very little to worry as long as this continues like this. I've never seen anything like that. This is even worse than. This is the point. I think the people around, I think 85% are from the previous cycles. And they are completely filled with PTSD through their eyeballs. It's my only explanation. I've never seen such a thing. Like, we make a new all-time high, then we sell off to 48 hours ago pricing, and we are already halfway through recovering that level, and people are super bearish. I'm really seriously, I'm really serious about this. I think if we go to 145K and we sell off to 135K, I think people lose their mind immediately. But that's the opportunity, right? As long as they panic, as long as they go completely ballistic, those are all the things that we like. As we mentioned, this cycle has been extended to 5.4 years in line with the debt rollover cycle. That means that this will play out most likely. I mean, just the probability different than the other cycles. There's an exception. What would be is if we completely explode in this quarter four. And when I say explode, think about Bitcoin 250K, stuff like that, then maybe we peak here in Q4. Otherwise, I see us going into middle of next year with a potential big correction between late December and the first half of the first quarter of 2026. So let's see if that pans out. I hope you guys are having a wonderful time. And this is what I like to see. I like to see the doom and gloom. I like to see the panic. I like to see everyone shouting for a bubble and to get out of the market. This is all good. Corrections are in the game. Pullbacks are in the game. Even bear markets are in the game, and you have to live with it. If you give enough time, the trend is up, and I don't fight it. If you want to fight it, if you want to short it, if you want to learn how to short it, if you want to spend money on it, you have a lot of channels that can help you with that. Not here. And with that, thank you very much for your support, guys. Don't forget to like and subscribe, and I'll catch you in the next one.